one sector that a lot of people have been speaking about, and that's the insurance space, because the premium that is charged on health insurance as well as life insurance was taxed at 18%. It moves to 0%. Of course, there was an ask to account for this input tax credit, which hasn't been spoken about in the GST Council meeting yesterday. What has been discussed is a move to 0%. But a lot of these companies moving higher. We are going to therefore be in conversation now with Yashish Dahiya, who is the chairman and group CEO of PB Fintech, which is an entity, as you know, that sells a lot of these policies. Yashish, thanks so much for taking the time and for speaking to us at NDTV Profit. So first, give us a sense of what the implication is for premiums with the GST rate coming down as much as it has.
I think the most important message that is going out of this is that health insurance and term insurance, and I say that very specifically because you also use the term life insurance. Life insurance in general did not have 18% GST. So for the savings plans, etc., you only had 2% or 3% GST and sometimes 4.5% in the first year. This was a charge which was largely impacting the term insurance component and the health insurance. And I think what the government has done is amazing, because this clarifies that these two products are a priority sector for the government. There is a big difference between a term insurance and a savings insurance plan. And the term insurance is a priority, which is for them very critical. And thus the GST and that has been brought down from 18 to 0. And similarly in the health insurance, I think the messaging of this is very, very important, that health and term, which are critical for social security of the consumer, are being seen as a product by the government where they will not charge GST anymore. So I think it's a very positive move. Yes, there are some input tax credits and there are some other pieces. I'm sure there will be conversations that will be had with the regulator on how to handle that. Overall, this should be positive for the consumer. Now, one more thing I would make. I don't think consumers buy products like health insurance or term insurance because they are 5% more expensive, or I'm sure you wouldn't do the same, right? If a product costs 10,000 rupees and you decide not to buy it, it is not that if it costs 9,500 rupees, you will suddenly rush to buy it, right? Because it's a thought through purchase where people make this purchase because they are trying to prevent themselves from very bad situations like death or disease, etc. Right? So I don't think that is the material fact. The material fact is the message that, look, the government believes it is important for you and is no longer charging GST on this product. I think that becomes a very powerful message. Yes, the price, the entire 18% may or may not flow through because there may be certain costs which do get added. And overall, it may be that the benefit is 10% or 8% or whatever it is. I don't think that number is very, very relevant. I think the messaging is far more relevant.
Right. Great opening set of thoughts, Yashish. Harsh also joining in. I want to start off by understanding what does this do to growth for the industry as a whole? In your opinion, does this drive volume growth higher? You did mention that a small discount may not make a material impact per se, but you cater to a larger set of individuals and you know the elasticity of this. So give us that perspective first.
I think there will be a very good Q3. I think, let us see. Look, let me explain a very simple thing to you. Suppose you are paying the policy in monthly mode and the price is going up by, let us say, is going down by 10%. That translates to about 1% extra charge every month. Now, I think you may think that is material or you may not think that is material. In making the decision of whether to buy a health insurance or term insurance, please understand in these products, these are not return products. If you don't have a claim, you should get nothing back. And that is the whole idea. You should not hope for a claim, obviously. But yes, if there is a claim, that claim can be very, very large. So these are not products that are very susceptible to a 5% price gap. But the fact that the government stands there and says that these products are very important for them are very important. If you are paying on a monthly mode, there's almost, very, very little change that you would have in terms of your actual pricing. But yeah, look, I deal with customers every day. I haven't come across that customer who says if you made it 5% cheaper, I would have bought it. But if it was 5% more expensive, I would not have bought it.
Yeah.
I have not come across that customer.
No doubt, absolutely. And this is more or less, Yashish, what we've been speaking about over the course of the last couple of days as well, is that there are two types of products or services that will get impacted. One, of course, where the incentive will be to go and say, okay, I'm getting this at a cheaper rate, and so therefore I should consider buying. It was on my list of things to buy in any case. But the other, and the aspect that we're kind of talking about, is that because there's money saved, it could lend to wider consumption and people could move up the value chain in certain pockets. So nobody really anticipates that people will go and buy a health insurance product because it might be cheaper. But having said that, I'm just trying to understand, you've spoken about the customer perspective. What about your perspective as a seller of these policies? If the benefit of moving to a lower rate for term, as you've pointed out, in health insurance, is to a certain extent X%, and there is going to be some sort of an impact on input tax credit, does that affect you in any way when you're selling these policies? Because at the end of the day, if there's an increase, that will have to be passed on by the maker of these policies, the insurance companies.
I think, as I said, these policies usually tend to not be that price sensitive from this perspective. What really matters is disclosures of customers. We are having a more complex conversation here. What is the most material fact is disclosures of customers and medical inflation costs. Those are far more material in their moves than the input tax credit element that we're speaking about. That is a one-time shift, and I'm sure there'll be some conversation that the regulators and the insurance companies will have in whatever is the fair way forward for that. And some balance will be found there. Because that's the nature of these. On ourselves, see, I spend 85% of our media spend on promoting only two products, health insurance and term insurance. And that's why I was very particular in making that distinction. And every meeting we've had with the government, we've always said, carve out term insurance as a special benefit area, because that is what is really, really critical for consumers. So for us, this is a bigger media spend. This is much more effective than any media spend we could have done, where the government comes forward and says, for health and term, these are priority sectors. Just the fact that you are speaking about health and term, and so are we, is a very critical aspect in making sure that more and more people become aware of these very, very critical products for Social Security. Think about that consumer who does not buy these products and then has a bad effect, where a person dies or the person goes to hospital and faces a 10 lakh rupee bill. What will that person gain by saving 1,000 rupees in a year?
Right.
It gains nothing, right? These are very important products, and I think this brings the discussion to the foreground. I have always said these are products nobody wants to buy, but everybody should buy, right? Because you gain nothing by buying the product, except for when you have a claim, you could save maybe 100 times the amount of the price you are paying. For a term insurance plan, you are spending what? You're spending maybe a few 10,000s, and the potential loss it prevents is in crores.
Got it.
Similarly for a health insurance, right? So I think it's a very lopsided product.
Right. Point taken, Yashish. We totally pick that up and we acknowledge it. Yashish, what is the second order impact of this? I want to try and understand of the input tax credit likely not coming through. Do you believe that there is a possibility?
Let me explain that aspect also.
Is there a possibility that commission payments may actually go down industry-wide? And I'm not talking PB Fintech, sir. I'm talking industry-wide. Is that likely to be a trend?
I will explain a very simple thing to you.
Right.
PB Fintech profit is 1% of premium.
Right. So again, not talking about PB Fintech, sir. So talking about industry-wide.
The reason it is important is because you could agree that PB Fintech is probably a more efficient seller than most others.
Sure.
Right. And even at our scale, the profit being made is 1% of premium. So it's not a large amount of profit that exists there anyway for a big transfer to happen in any situation. So I think it is a more talked about point than a genuine point. See, nobody can operate at negative, right? On a sustainable basis. So there is only a 1% play there. That's all.
And even if there was, and the point is well made. I think that clarification, Yashish, is important to have, and your larger point is also made, and I take that completely, because we speak to your prospective customers and your customers on an ongoing basis as well, and we exhort them to go out and get the protection that they need. So thanks so much for joining in and for making the points that you did. Pleasure speaking with you as always.